Well, welcome to this presentation coming to you from the auditorium at the Exchange. If you guys do have any questions, please feel free to type them up and we'll see them outside. And just be aware, we are under a little bit of time constraints. There are a couple of concepts that I would have liked to have fleshed out a little bit. So if I go a little too fast, or if you want to talk about it some more, my contact details are going to be at the end, and I'm going to be more than happy to take your call or receive your email. Right, let's see what we're going to be talking about today. The agenda that we're going to cover is, what do we mean by managing your portfolio? Why is it important? What are the objectives of your portfolio? I mean, why did you start a portfolio? How should your portfolio be managed, and what are the mechanics thereof? Tools that you can use to manage your portfolio, and then we're going to go through a quick summary, close, and some questions. I'd like to start the presentation with a quote. Okay, and this quote comes from Maria Bartiromo, who's a journalist with CNBC. Okay, she says, having the opportunity to follow the market frequently gives you the opportunity to see if you need to reevaluate your portfolio. But reevaluating your portfolio shouldn't trigger a sell signal so frequently. The most important bit of that paragraph that I want to deal with is the first bit. Having the opportunity to follow the market frequently gives you the opportunity to see if you need to reevaluate your portfolio. What do we reevaluate? Okay, within a portfolio, you have holdings, and those holdings are things like Sasol, BHP Billiton, Old Mutual, First Rand. They're actually individual shares. Okay, and managing your portfolio is all about reevaluating past decisions with regards to those holdings in light of current data and current circumstance. Okay, it involves comparing the performance of that particular holding, be it Sasol or BHP Billiton or whatever it is, to what you expected it to do, where your expectation is what you wanted that holding to do for you over a particular time period. Reevaluating your portfolio also involves comparing your current performance to the overall market. A lot of people are going to say, my goodness, you've introduced a whole bunch of concepts here that are quite esoteric. Let's actually take it a little bit slowly and go through it one by one. Managing your portfolio is all about reevaluating past decisions of your holdings. Okay, let's use an example. We've purchased BHP Billiton. We expected it to do 10% growth over a matter of a year. When we reevaluate the portfolio, we look at that particular holding, BHP Billiton. Has it done what we expected it to do? If it's done more than what we expected it to do, great, life's okay. We can continue to hold it. If it's done less than what we expected it to do, what should we do about it? Should we hold it? Should we sell it? Is there something better out there? Looking at your portfolio or doing this reevaluation, we also look at the overall market. If your share has grown by 7%, but the overall market has grown by 15%, is that a good performance? Is that a bad performance? If the overall market has declined by 10%, but your shares have declined by 15%, is that a good performance or is that a bad performance? The object of reevaluation or managing your portfolio is all about answering three questions. Should we buy or should we buy more of a particular holding? Should we wait to see if the performance or the behavior of the holding is going to change, or should we sell? Right, to illustrate this, I just want to make use of an example. Okay, one of the most popular holdings of the participants of the trading challenge has been Old Mutual, and this is a graph of Old Mutual. And just for interest's sake, you'll notice that I put a little green triangle which should be in the middle of your screen, and that is the start date of the trading challenge. Okay, both the participants of the challenge who bought the Old Mutual at the beginning of the process initially were doing quite fine. the market opened at 35 Rand at that day, closed at 35.22. Obviously, you would have bought somewhere between 35 and 35.22, assuming you bought it on the 1st of September. And life was great. It went up to 36 and it went beyond 36. But unfortunately, since then, the performance hasn't been so great and the share price has declined, which means that your asset value has declined. Okay. As of the 14th of October, the 14th of this month, Old Mutual was down 12.1%. Okay. Now, if we bring this back to the JSE Trading Challenge, where you've only got a 3-month period in which to win, essentially, holding a stock that is actually starting to cost you money is going to put you out of contention, essentially. Okay. I'll put it to you that it would have been better to have sold. Okay. The process of reevaluating your past decision to buy Old Mutual in this case perhaps would have pointed out to you that it might not be that prudent to continue to hold that stock. Okay. Now, everybody listening out there, I'm not saying go out and sell Old Mutual right now. Okay. Let's just be aware of that. I'm just putting a concept out there to you. Okay. Why is it important to manage manage a portfolio? Now, we've touched on this fairly briefly in the previous slides, but let's discuss it further and let's use an example. On your screen, there you see a graphical representation of a share price of a particular company over a number of years. Now, let's use an example. A person bought this particular share because he had an objective to meet in a couple of years down the line. We'll call that year X. Initially, this particular stock did very, very well for you. I mean, the share price went up, assuming he bought it at 20, it went up to 25 Rand. Great. That is a fairly healthy return on investment. Okay. But then the market conditions changed and the value of his holding declined. Okay. And as the value has declined, because this person was not reevaluating his original decision, he's actually incurred a fairly substantial loss. His original investment is not worth that much anymore. Okay. Managing your portfolio is very important if you want to keep it moving in the right direction in the most efficient manner. Okay. The reason why you have a portfolio made up of holdings is that you have an expectation and an objective to make profit. And if things are not working for you, we need to do something about that. Okay. Let's bring this home a little bit closer. Let's talk about the JSE Trading Challenge. All of you guys listening out there in Radio Land, as we will call it, have an objective for participating in the JSE Trading Challenge. Some people might be trading to win. They want the prize money. Other people are trading to learn. Okay? But whatever it is, there's only a 3-month window in which you guys can participate. Okay? Looking at some of the participants in the challenge, there are some people out there that have bought it in September and are just sitting on their holdings, and every single one of their holdings is losing money. The probability of a great turnaround, while it exists, is not very strong. Okay, so these people are never going to win, and also because they've just bought and are holding onto their assets, there's no learning that is happening. Okay. On the other side of the coin, some participants who are in the top 5 have been a little bit more active in re-evaluating their portfolio, looking at what they're doing, looking at the performance of their holdings. Okay, but everybody's doing it. Some of them are sitting on holdings that are not moving as strongly as their neighbors, and the people behind them are closing the gap. Your competitor is closer than you can imagine. Okay, once again, managing your portfolio is important in order to keep your money growing in the most efficient manner according to your objectives. Now, I've been talking about objectives, and in the last slide, I mean, I must have mentioned objectives 6 or 7 times. The reason why I do that is surprisingly few people have an objective for investing. Okay, when I ask them, they say things like, "Oh, I want to make money." Well, Great, very pleased about that, but you can make money in a bank. You can make money by buying a unit trust. You can make money by investing in your brother-in-law's fish and chip shop. Okay, it's not necessarily why you have a portfolio. A portfolio must have an objective. Okay, you want your money to grow at 10, 12, 15% per annum, whatever you think is, or whatever your objective is, over 1, 5, 10 years, whatever it is, according to the risk that you're comfortable to take. That is the objective. I want to grow my portfolio at 12% per annum over 5 years without subjecting myself to undue risk. Okay. Once you know what your portfolio should be doing, you can then choose the right holdings for your portfolio. So, for example, if you want to grow at a moderate rate, okay, over a fairly long time, but you risk adverse, you're not going to go out and buy a highly volatile derivative, for example, okay? And that is part of portfolio management. You choose the right holding according to your objectives, okay? Once again, I want to come back to the JSE challenge. There's a 3-month period, and the person with the highest net asset value wins, okay? If you're going to adopt a buy and hold strategy and the market is not working with you, you're never going to be a contender as such. You need to make changes. You need to recalculate, and you need to think about what you want to achieve. Okay, we're halfway through the challenge. There's still time to make some decent growth out of there. Right. Before I continue, let's just do a summary. Okay, managing our portfolio is, well, we talked about what a portfolio is. Okay, it's a holdings of shares. Okay, we spoke about why it's important, because if you just buy something and forget about it, if it's not doing what you expect, you run the risk of a loss. Okay, we've also spoken about the importance of having an objective, because that will help focus your decision making on shares that are appropriate to you. Let's talk about some of the mechanics about how a portfolio should be managed. Okay, we now make the assumption that people know what they want. Okay, they know what they want their money to do. Okay, once you know what your portfolio wants to do, we review each holding, okay, to answer 3 questions: buy, wait, or sell. If you're not in the market and you want to come in, or you want to enter the market, you review a potential stock and you say, should I buy it now? Should I wait? If you've got existing holdings and you review that holdings performance against your expectation in the market, you ask the same questions. Do I buy more? Do I wait and see what is going to happen? Or do I sell? Okay. You should follow a decision-making tree or a decision-making process to help you answer these questions. Okay, so it becomes a fairly structured process. And let's use an example. Using Old Mutual, for example. Has your holding done what you expected it to do over the period, over the last month? Okay. If the answer is no, okay, we need to ask, is this a short-term aberration? Do you think that it's going to correct? Is it going to recover? Is it going to do what you expected it to do? If the answer comes back as no, we need to ask ourselves, are there better alternatives out there? And if there are better alternatives, then perhaps we might need to sell that position and buy something else. Okay, once again, using buy, wait, or sell. Okay. I often get questioned by some of my clients, how often should we follow this process? This process is dependent on your time horizon as well as the risk that is in the portfolio. If you've got a very short time horizon, we need to review the portfolio more frequently to correct any portfolio underperformance. Okay. If you've got a much longer time horizon, then you can afford to deal with market fluctuation. You can afford to ride them out. And that is not necessarily a bad thing. If you've got a lot of risk in the portfolio, for example, you've got a derivative position, and this position has the potential to cause a great amount of capital loss, once again, we need to review our holdings on a more frequent basis, just to make sure that things don't go off-piste, so to say. Okay, so you follow a process. It's dependent on your time horizon and the risk in the portfolio. The shorter the time horizon, the more speculative the portfolio, the more often this decision-making tree should be followed. Okay. In terms of tools at your disposal, okay, I'm of the opinion that conversations with people in the know are the most important tool that you have at your disposal. Okay. Unfortunately, you guys part of the JSE challenge, there isn't a broker who you can pick up the phone and speak to and get advice, get guidance, get another opinion. Okay. But speaking with people in the know is a great way to gather information. For you guys specifically in the challenge, I think that there are a couple of great internet-based resources. Okay, for example, you can just use the JSE website. If you go to www.jse.co.za, click on individuals on the landing page, it will then open up a watch list page for you. And there you can click on the individual shares and look at their performance. So click on them, go through them, see how your shares have performed over a particular period of time compared to some others that you might have selected. Another great website that you can use, but this is just for more general data. You can use Fin24, www.fin24. In the search box, type in the share that you are wanting to look at, okay, and then go and see why it is in the news, okay. Has there been a change in directors? Have they got a new contract? Is something going to happen that is likely to change the performance of that particular stock? Okay, go and look at it. Something which is slightly more sophisticated is a subscription service, and this is just an example. I'm certainly not punting them. You can look at share data. Okay, this is going to cost you money, but if you are going to come into the market at a later stage, it might be worth getting a subscription, because there you can access things like consensus forecasts. That is, on a particular share, a whole bunch of brokers will give it a rating, buy, hold, sell, and then when you look at a particular share, you can say, well, 7 out of 10 brokers think that this share is a buy. You can look at, there's an easy place to access Sense articles, which is the stock exchange news service about particular shares. And this will tell you their results, whether directors are buying, whether directors are selling, that kind of stuff. You can look at graphs of shares. You can do a lot more detailed research. So I'd go and take a look at it. I'm sure there are other subscription services out there, but this is the one in particular that I think is fairly decent. Okay, right now, in terms of summary and close, managing a portfolio is about reevaluating your purchase decisions in light of current data. I bought it expecting to do that. Share price has declined. Okay, is it worth holding or shall I sell it? There is a cost to a buy and hold strategy, and we used an example earlier about that. It's important. Portfolio management is important in order for you to meet your financial objectives. You didn't come into the market just because. You came into the market because you wanted to do X. And the more focused the objective, the more focused your thinking is going to be. A general objective, for example, just make money, is as useful as a wet paper packet. Use a decision-making process that you can apply over and over again when evaluating holdings in your portfolio. And how often you do this is going to depend on time, and it's going to depend on risk. Okay, tools are available to you. There's the internet, there's speaking to people in the know. Your gym trainer or the person in the bar are not the people you should be talking to. Speaking to people in the know is what you should be doing or can be doing, and that'll be easier once you have an account with a stockbroking firm. I want to end my presentation with, once again, using the same quote that I used at the beginning. Having the opportunity to follow the market frequently gives you the opportunity to see if you need to reevaluate your portfolio. But reevaluating your portfolio shouldn't trigger a sell signal so frequently. This time I want to focus on that last sentence. Reevaluating your portfolio doesn't mean you need to change things. It just means that you need to apply your mind and answer the following questions. Should I buy? Should I wait? Or should I sell? Right. And ladies and gentlemen, everybody out there in webcast land, thank you very much for dialing in. This is the shameless plug. My name is Paul. I'm from Thebe Stockbroking. We have offices in Joburg, Durban, Bloemfontein, Pretoria, pretty much everywhere, okay? My contact details or our contact details are on the screen. We might not be the biggest stockbroking firm, but we're willing to engage. Give us a call and let's have a conversation. Thank you very much.